Welcome to our eSignal midweek Forex forecast. My name is Jay Norris. I teach trading at Trading University. As always, we need to remind you that trading is a risky endeavor and not suitable for all investors. We're going ahead with a midweek report this week because there was some pretty big moves in the market and we want to keep you on top of those. You're looking at my screen. That's very similar to how we teach our courses. You can see three markets at once here. The euro on the right and the Swiss upper left and dollar index lower left. This is a pretty important level for us. The reason I'm showing you all three markets at once is because that's how we approach things at Trading University. Not only do we want the majority of patterns aligned in an individual market, but we want to see the majority of markets aligned themselves. If you look at today's candle here on the right on the euro, it's right at a pretty significant level for us. That's a significant level because it's our 25-day pattern line. Get a couple of closes above that level and that's going to shift that 25-day pattern. That's going to be significant for us because when you look at our RTT ratio itself, if you shift that pattern bullish, regardless of whether you trade the 5 through 25-day patterns or you trade the 10 through 50-day patterns, you're going to have the majority of patterns up then, and that means from a trader's perspective, guess what? We're going to shift gears from selling rallies to buying dips. So if you do get that shift and you're right at that level right now, that's going to be significant for us. As of right now, it hasn't happened just yet, but we're going to stay tuned, and I'm going to break this down on a 4-hour chart, give you a little bit more detail, show you what we're looking at. I want to see a couple closes below that level on the 4-hour chart in the dollar Swiss and the dollar index. Likewise, I'd want to see a couple closes above this significant level, that RTT level in the euro. What that'll do is that'll shift that 25-day pattern to bullish. That means we move from selling rallies to buying dips in that market. Okay, so shorter term, intermediate term, we're going to shift along with the market. Now, what prompted this big rally in the euro, likewise a big sell-off in the dollar, was the U.S. retail sales number. I want to put that in perspective really quickly. Here's the actual numbers. Hopefully you can see that. If not, you can go to the U.S. Census's website at census.gov and you can look up the numbers yourself. Here you can see here was today's number that was released, the September retail sales, and they were a little less than 2 billion less. The September number was a little less than 2 billion from the August number. What I noticed on this chart is you had 8 months growth in a row. You were almost set up to have 9 months growth in a row in retail sales. Now, to put that in perspective, the last time you had 12 months in a row of steady growth in U.S. retail sales, you had to go all the way back to 1999. So no matter how you spin it, that's been pretty good growth level. Retail sales came in January at, if I'm reading that number correctly, it's $378 billion in January. They've grown every month. They topped out in August at $396 billion. So pretty good growth. Now, I also want you to notice the September number came in at $394 billion. When you compare it to last September, you were at $379 billion. So you're well above that number. So a lot of the retail companies themselves, they didn't exactly expect a blowout number this month. In fact, they know that seasonally this is kind of a soft spot for retail sales. You had a pretty decent back-to-school market. Back-to-school retail sales were significantly higher than the previous year, and you're ramping up for the holidays too. So in the retail world, they weren't exactly expecting a blowout number. So it's no surprise that that number was a little bit soft. I wanted to put that in perspective, but what really matters is not what I say, or it's not what the CEO of Home Depot says, or an analyst at Walmart says about it. What's most significant to us is what does the market say about it? How does the market interpret it? And that's why we rely on the numbers. We rely on the cold hard numbers that our eSignals chart is giving us. And the bottom line is right now you haven't quite shifted the euro higher. That 25-day pattern hasn't quite shifted yet. I'm looking at that line. I need 2 closes above it to shift it. If I get 2 closes on the 4-hour above there, essentially I'm going to start to look to buy dips. That doesn't mean I jump in and go long just because that pattern shifted. Show it to you right here. It hasn't shifted yet. It's still down. If this, however, shifts up and you have all these shorter term, even intermediate term patterns shifting higher, that doesn't mean I jump right in and go long. That means we look to buy dips from there. So pretty significant levels you're at right now. And you can see that the dollar Swiss has actually shifted that 25-day pattern lower. Now you had 2 4-hour closes above it. Dollar index hasn't closed. You don't have 2 closes yet. So the dollar index, the 25-day pattern, which is a pretty important pattern for us, that's about a month long. That's a pretty good pattern. That's a pretty good trend. So month over month, the dollar index is right at that level where it could break. You know, it's bending now, hasn't broken yet. So we're going to watch that. So for now, the dollar Swiss has shifted its 25-day pattern. However, the dollar index itself and the euro have not. So from our perspective, well, looking at just these 3 major markets, you have only one of the 3 has shifted just yet. Now, that could certainly change quickly, and we'll stay on top of that, and we'll definitely be back with our weekly report at weekend to show you what happened. But I do want to point out that these markets are in an interesting position if you continue to see even slightly higher prices in the euro on a 4-hour basis than on a daily basis. You get a daily close above that significant level right there, which comes in right around 128.30. We would see that as significant, and we might expect from there that you could see a rally even on into the 32, 33 handle in the euro. So happy to do the midweek update. Pretty significant moves in the market. For now, however, we have not seen that potentially big shift, that 25-day shift that would herald a bigger short covering rally here in the euro, which overall, panning back out to a weekly chart, we would see as a selling opportunity. So we're keeping our fingers crossed that we may yet see a short covering rally on a bigger level that will give us opportunity to perhaps get short that market at those levels. But for now, the cat is still in the bag. Peeling back down to that 4-hour chart, you can see markets finding resistance at that 25-day pattern line, at that 25-day risk tolerance threshold level. So that's a big level to watch. Hey, thank you so much. Good to see you guys. I teach trading at Trading University, and we'll be back again to see you over the weekend. Thanks now.